Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for January the 18th, 2012. Now, to get started here, our first trade for tonight, we're going to look at the Australian US dollar. Now, we're going to do somewhat of a counter trend trade here. What you can see is that I've got a trend line drawn in here all the way back to essentially October, pretty much actually I would say July, August, right back here. We can see this going all the way back. I've connected this to the October 24th high, which brings my trend line in around 104.50. Now, what we're looking at here from the vantage point indicators is whether we have momentum to push through that trend line and go higher. Now, our predicted stochastic is crossing over to the downside in overbought territory, and our predicted true strength indicator is also crossing the trigger. It's getting ready, I would say, to cross the trigger in, again, overbought territory. Now, this trade is going to be counter trend, and it is going to be a volatile one, so certainly not for the faint of heart. Now, looking at again, what we're going to do is bring in the short-term crossover from vantage point, which is trying to cross to the downside now. The medium-term crossover is slightly to the downside or pretty much flat, and our long term is still sitting there showing a longer term trade. So we did have a holiday again yesterday with Martin Luther King Day. Now we want to come into our daily report and have a look at it. What I like to do is look at the day prior to the holiday, and you can see the day prior to the holiday the neural index was down. Now we were flat yesterday. We don't do any analysis when the markets are closed. Then we have the neural index is up. So in my opinion, there's a very good possibility that the neural index is more accurate from Friday than it is for today. So we've got 104.24 is the high, 103.28 is the low. We're going to sell 104.24 and we're going to use our stop about 105.20. So we're going to give about 100 pips, about 100 pip stop loss. I think is a reasonable play because we are going to it is going to be volatile, and we'll be looking for this trend line to hold, and for this overbought condition and the holiday yesterday. Now we had some data out of China that I don't think was really all that great. I don't think it's enough to turn risk around and change the environment in Europe. All of a sudden, magically, lending is going to appear, and the financial crisis is not happening. I don't think I don't believe that risk will be on for any length of time, and I think there's a very good opportunity for a short here on this particular currency pair. Now, that's our first trade for tonight. Now, our second trade for tonight is again going to be another volatile trade, the ProShares UltraShort Oil and Gas, the DUG. We've been trading this one now for several weeks. We're looking for a break on the top side to this. Now, again, crude oil, light sweet crude oil has got a boost from that Chinese data last night. But again, I think this is going to be very short-lived. Oil has also received a bit of a bump higher on the Iran conflict that is also subsided. Now, we have some fundamentals coming up in the days, weeks, and months ahead, specifically in the Eurozone. I think Greece is likely going to default. This is going to put a lot of pressure on commodities, specifically light sweet crude oil. We remember the financial crisis in 2008, and they were also calling for $140 a barrel in oil, and it just seemed like in a blink of an eye we were under $40 a barrel of oil. I'm not saying we're going to go to $40 a barrel this time, but I could definitely see us settling in somewhere between 70 and 80, and that would put the DUG back up in the $40 range. Now, looking at this, I like this signal. We're oversold. The predicted true strength indicator, predicted MACD, both crossing the trigger to the upside. Predicted short, medium, and long-term differences sitting at trend-ready levels. Now, what we want to do is also break this down by the crossovers. When the short-term crossover is crossed to the upside, we're starting to pull back after today. Medium-term crossover has also crossed to the upside. This is a very, very strong signal, which I believe will progress in the days ahead. Our long-term crossover is sitting flat, and it's trying to make that move to the upside. So everything, we're going to have to be patient on this one, but I think it's got the probability of a very, very good payday. Now for tomorrow, we're looking at a range of 24.64 to 24.45 with a close of 24.88. So this is saying we're going to have kind of a weak open here. The neural index is down, which is fine. So on a move down to 24.45, we're going to use that as a buying opportunity. The initial target for tomorrow, I would say, would be back up over this particular area, but I would say probably in the 24.90, maybe even 25.10 area. But medium and longer term, I would be looking at 28, 29, and potentially higher on this particular ultra short ETF. I think this trade has a very, very good opportunity given the current economic climate. So with that said, these are the market positions for January the 18th, 2012. And again, my name is Greg Furman, market analyst here at TraderPlanet.com.